Good afternoon, this is Rich Nelson with Allendale doing a special market recap here for today's USDA report that came out at 11 a.m. Central here. Now keep in mind, this is a monthly supply demand report. On this one, USDA is always trying to guess how much corn, soybeans, and wheat will be left over at the end of the marketing year. This is different than last month's grain stocks report, which updates how much is actually left over at various points, in this case March 1. Now based on that last grain stocks report that we learned back on March 28th, we knew that corn, soybean, and wheat stocks, as far as old crop actual stocks, were higher than expected. Therefore, the trade had expectations going into today's report that USDA would raise its estimates of the amount of old crop that would be left over at the end of the marketing year. For corn and soybeans, the marketing year ends at the end of August, and for wheat at the end of May. So keep in mind, these are two very different reports, but certainly today's should have reflected some of those changes that we saw on the March grain stocks report. Now for corn, we did have some of those changes reflected here. The trade was expecting corn ending stocks, what's left over at the end of August, to rise from 632 million bushels up to 812. A large increase was expected. Only a moderate increase was seen to 757. As far as the actual breakdown, we'll point out that corn for feed and residual was lowered by 150 million bushels. Exports were lowered by 25 million bushels. Both those are very reasonable numbers here. The USDA did kind of surprise us a little bit, though, with their 50 million bushel increase plugged in for ethanol here. Now, that's actually concerning the last couple of weeks of changes in ethanol margins, that actually is more or less reasonable. The fact is right now that you're looking at a 32-cent per gallon profit for making ethanol, which is the largest since December of 2011. So certainly the sharp drop in corn prices has triggered some demand for ethanol here. Now, keep in mind, while a lot of people wanted to be bullish going into this report, and will say that the smaller than expected increase in corn ending stocks is bullish, we will caution not to have that feeling here. Keep in mind, USDA's current corn for feed number is only a 3% drop from last year. That's their whole year number. And certainly when you consider that total supply of corn this year is down 12%, in our opinion, there's still quite a bit of room for USDA to lower corn for feed in future reports here. So don't get bullish based on this report. Also keep in mind, as far as the world numbers for corn, USDA kind of threw us for a loop here a little bit here. They did increase Brazilian corn production by 1.5 million tons. They left Argentina unchanged. The surprise in this report was how proactive USDA was in reflecting bird flu concerns as far as their feed use. They actually increased they decreased Chinese corn for feed by 1.5 million tons. So higher U.S. stocks, higher production out of Brazil, and lower demand for Chinese corn. That jumped ending stocks as far as worldwide from 117 million tons last month to 125. So actually this report is a net negative when you consider what USDA did here for the bird flu issue on the world side. As far as soybeans, keep in mind, just like corn, we did expect to see ending stocks increased, and we expected the residual use for ending stocks to be, or residual use for demand to be where it changed. And USDA did make some of those changes here, but they actually offset all of those changes with increases for crush and exports. So the net change for soybean ending stocks was actually unchanged at a very tight 125 million tons. Now, when we look over on the world side, though, the same type of issue showed up here as far as world that we got to point out. Though Brazil and Argentina production numbers were left unchanged for soybeans, the surprise here was on China. They dropped Chinese soybean imports by 2 million tons, basically saying that Chinese buyers are just getting frustrated. They're not going to turn to the U.S. for any major increases in exports from here on out. Instead, they're simply going to wait. And that's one issue we will point out here. The drop in soybean imports of 2 million tons brings them only to 61. Keep in mind, Chinese officials are using a 59 million ton import number. So they dropped import numbers today, and it's likely in the future reports they will drop them further in the future. So that's why we did see a net increase in world stocks from 60 million tons up to 63 on today's report. As far as wheat, We did expect a moderate increase in ending stocks, and that's exactly what USDA gave us. They dropped wheat for feed by 15 million bushels, and they increased ending stocks from 716 to 731. Very reasonable. On the world side, we also have some bearish issues to discuss here as well. USDA went ahead and increased exports for Australia, EU, and also the former Soviet Union states by moderate amounts, and they reflected some issues on concerns for Chinese wheat for feed. They dropped wheat for feed by 3 million tons. So the bottom line here is, while we did see some changes on the U.S. balance sheet, the world changes for corn, soybeans, and wheat were more important for us to focus on. So bird flu concerns are dropping corn for feed and dropping wheat for feed in China here. That's why we saw a pretty good increase in world ending stocks from 178 million tons to 182. Briefly discussing the meat side, USDA did drop their estimate for U.S. beef production. That was expected. They now have a 4% decline versus last year plugged in. And they went ahead and increased pork production. They now have a 1.1% increase over last year, and that's really as expected as well due to that recent Hogs and Pigs report. So bottom line for today's numbers is, yes, old crop stocks are still relatively tight, but we're still not in a position where we're going to panic. And certainly as we get this crop, the new crop planted and growing and emergence and those issues are seen, then the trade will probably feel a little better about supplies in the big picture here. This is Rich Nelson with Allendale. If you have any questions regarding today's report, its market impact, or what you can do for trading or for hedging, marketing your crops, feel free to give us a call. Our number here at Allendale is 1-800-262-7538.